It has been a year since JCP CEO Ron Johnson announced his vision to transform the company. He was just on our air exclusively. Had quite the interesting take on the company's business model. Take a listen.
If I had to do it over again, I'd do it almost like we did it. I'd change some of the tactics. I'd been a little more clear on pricing. But we had a business model that didn't have any growth in its future. Every business needs to build off a growth platform.
James Fallon is an editor with Women's Wear Daily, and Stacey Widlitz is the president of SW Retail Advisors. Guys, good morning to you both.
Good morning.
James, he says when he came in, company had no growth in its future. People still wonder if there's growth in its future. What did you make of the interview?
I thought it was interesting. He said a lot of it before, but it is the pricing message is key, and they have to make that clearer. It also is the question of how fast he can transform the company and attract those new customers.
Sounded like he said, Stacey, return to positive comps this year in fiscal 13. Is that a pipe dream?
You know, that was the most interesting part of the interview, I thought, was that Ron Johnson was willing to draw a line in the sand and say return to growth, which I think most investors aren't really expecting next year. And that's going to be a very tough road ahead. Yes, to say the least. So I thought that was the most interesting point. And it really gives me a flashback to remember last year when he gave us guidance, of course, too optimistic and then had to pull back. So I would say that's a bit of a leap of faith.
Yeah, James, I'd like your view on that. And, you know, he talks about sort of vision-driven ideas, getting rid of the older customer, going with someone who's new and affluent, a young and affluent. At the same time, though, he can't get away from the conversation about the revolver and whether or not they have enough cash for the next year or two. Your thoughts on that?
Well, I do think they do seem to be using a lot of cash. He was very confident about being able to self-fund the transformation, as he said. It is key whether the marketing message will attract those new customers. I mean, remember, as far as the comp sales issue, he is coming up against significantly softer comps this year. So you may begin to see some growth. Anecdotally, we've heard that, you know, their holiday period was actually pretty good. They were beginning to attract some new customers and get some traction.
Finally, Stacey, I wouldn't call it a pot shot, but definitely a shot across the bow of the shorts, saying that investors these days try to make money in what he called short, artificial ways. Deserved or not?
I mean, I think that's the environment we're working in. Sure, they're going to be short-term investors looking at this stock. He wants us to focus on the long term, but the short-term reality is, you know, comps are down 30-something% probably this quarter. So, you know, that's the short term is what we have to look at.
Yeah, fascinating stuff today. Guys, thank you very much for your insight. We'll talk to you a little bit later. Thanks.